Hi, everybody. Again, I'm Paul Lange. Some of you know me, maybe some of you don't. I have spent a lot of years in the market. I thought maybe we'd get to know each other a little bit for just a couple of minutes. I generally try not to be boring. I'm usually pretty good at keeping people entertained. That is, if you have an interest in the market and specifically making money in the market. I was in the industry for a long time, and maybe some of you know of a company called Pristine that was going back a number of years. It was the place. It was actually quite a large company at some point. They eventually fizzled off, like a lot of companies did, and I went off on my own about 18 months ago. I opened, well, actually it was about 2 years ago, but I waited a while, just kind of hung around and stayed quasi-retired, and then I really got the bug to get back, and I really enjoy showing and teaching people how to do this, and I'm told I'm good at doing that, and I have some unique ways of teaching and understanding the market. And I started my own company called Disciplined Trading Strategies. Just like it sounds, Disciplined Trading Strategies. If you get Disciplined Trading in there into Google, it'll take you to my site pretty well. And I want to let you know I have nothing special to offer you guys. I know when people come on to Investor Inspiration, I have the opportunity to give you some special offer. I don't do any special offers to people because I don't really want to overly encourage anybody to jump into anything. What I encourage you to do is to just kind of get to know me if you like what you hear me saying today, to check out my site, to become a free member at DTS and get a lot of free information. I know most people, want to try and learn this themselves. I did 19 years ago. I tried to learn this myself as well because I felt I was a smart person. And actually in my second half of my presentation, I'm going to talk a little bit about that concept. But after a while, I finally realized that I needed to get some help because this is very unique. And over the years, I built up a lot of, I think, very unique ways to look at and to trade the market. When I say trade, trading is not a time frame to me. It is a style. It's a mental process. So when I talk about trading, I like doing long-term trading for things that last, weeks or months. And I also like short-term trading. I like day trading, and I have a day trading room. Again, just so you get to know me a little bit, when some people say day trading, people kind of cringe a little bit because they don't know what to expect. I'm a very laid back, kind of half day or all day type of trader. I'm not a hyperactive type person at all. I'm not what you'd call a scalper. Not that there's anything wrong with that. I know a lot of scalpers who do very well. It's just not my style. I'm a little more laid back. So with that, there's a little background on me. If you have any questions at all, let me know. Otherwise, I'm going to get going. I thought the first talk today would be great because it's going to flow into the second talk, and it's going to be talking about great technical concepts. It may start off a little boring, but I assure you I do have some charts in here and some trades from recent things that are here to kind of justify and show you examples of exactly what I'm talking about. So I am going to begin here. Again, there's DTS, Disciplined Trading Strategies, and if you want to, while I'm here, if you want to check out, you can take a look through the free stuff page here if you want to, because I'm going to refer to a few things. That'll take you to an area where we have all kinds of free information and really good stuff. This is not sales stuff. It's good free information that you can access on Disciplined Trading Strategies. Prior events, play of the weeks, a lot of good charts, a lot of good things you can look at there. So take your time, look at that when you want to. Here's what I want to go over right now. I want to talk about technical trading, definition of technical trading. What is technical? Can you trade in a vacuum? And the balancing act that occurs anytime that you take a trade under any circumstances, no matter what you use to trade. If you guys can hear me and answer, give me a quick couple answers if you don't mind. What do you guys like to do? Are you stocks? Are you long-term, short-term, technical, fundamental? I just want a little feel for what you guys are as an audience. What are your primary things? Swing, core, keep it coming. What do you guys? Because what I do applies to any time frame. It doesn't matter if we're day trading on a 5-minute chart or if we're long-term trading on a monthly chart. It's the same thing. I'm very big on futures and market analysis. I use that as a core of what I do every day, TJ. Hey, TJ, I know you. Stocks, day and core. Okay. All right. So again, I'm a balance of one thing I do not like, for what it's worth, I do not like that specific term swing trading for what it applies for most people. That 2 to 3 to 4 day hold is a very difficult time frame. I have a video on my site. If you go there under the educational videos, and it's called two time frames to be aware of. I think if you're doing pure swing trading, you're probably having a hard time, or you're very, very good at, because it's the most difficult time frame out there to me to make money at. And yet it is what most people are told to do, right? If you don't have the money to day trade because you need 25,000, people are told, oh, practice swing trading. Terrible advice. Terrible advice. It's the most difficult time frame by far. So difficult that I don't even do it. I go from day trading to longer term trading and nothing in between. So let's take a look and begin with a couple of concepts here. Now, these first couple slides may be a little bit boring, but I think it's very important. I want you all to also understand that between technicals, which means looking at charts and statistics, and fundamentals, I am not 100% technical, I am 110% technical. And to have a discussion about that with me, I will gladly have the discussion with you, but to me it is the same discussion as, will the sun rise in the east or the west tomorrow? There is no discussion about it to me. But I understand everybody is learning, and it's not because I was influenced that way, it's because I had to learn myself, and I learned that there's only one way to understand the market. And by the market, I mean the market itself, I mean stocks, individual stocks, I mean Forex, I mean futures, commodities. It doesn't matter what you're looking at, it's all the same thing. And don't let anybody tell you differently. You don't need special charts or special moving averages or special techniques to trade Forex or futures or anything else. It's the same stuff. I know some are pips and some are ticks and some are cents, but it's all the same thing when you're all done. So this is my definition of technical analysis. Oh, thank you, Joe. Using technical analysis to find a moment, my definition of trading. And again, remember, trading, some people imply that means day trading. It doesn't. For me, it means any kind of purchase and sale of whatever you're doing, whether it's over weeks or over seconds, whatever it is. Using technical analysis to find a moment in time. Now, this moment in time language is big to me. It's huge. And I'll get into that more a little bit later. But what the moment in time means to me is that, listen carefully to this, as much as I love charts, charts can only take you so far. Does everybody understand what I mean by that? Charts can only take you so far. You can't look at a chart and expect to know within pennies when something's going to happen. We get the general flow of what's going on. We get a general sense. We get great information. But there's a limit to what you can do with a chart. And at some point, there's a little bit of math and probabilities that take over, something that most people won't tell you or try to teach you. And that's what moment in time means to me. It means finding that exact moment, or if things are going to move, they're going to move. And it's also very consistent with the statement that Mark Douglas made famous, that was, you don't have to know where things are going to make money. And it's really true. It's something I believe in very much. It's about that right moment in time. Then it becomes a matter of entry and management. In other words, it's having the knowledge to know when the odds are in your favor, having the patience to wait for that moment, and having the discipline to handle the trade properly when it goes in your favor and properly when it goes against you. These three big words here I've capitalized: knowledge, patience, and discipline. Which is actually the easiest to gain? Which is the easiest to gain of those three? Knowledge, patience, or discipline? Some answers, please. Knowledge, patience, or discipline? Unfortunately, when I talk, I make you type a little bit, or I won't talk anymore. Absolutely correct, guys. Absolutely correct. Knowledge is the easiest. Now, I'm not saying it's easy. Most people come to the market, I'm going to say the market in general, and they try to conquer everything without acquiring any knowledge. Just, the seat of the pants method. I'm really smart. I've learned everything else in my life. I can learn this. That's how I was too initially, until I got my butt handed to me. So knowledge is not easy, but it is by far the easiest. How tough is patience, guys? How tough is patience? Isn't that tough? Wow, it is tough. To have the ability to say, I'll miss that if I need to, but I'm not going to be tricked into taking it early. That's something I wrestle with every day. I'm probably better than the average person, but just acknowledging that's one of the things you have to wrestle with is the first step. And discipline. This is where everybody blows it. The discipline to handle a trade properly. And you know what? What is the discipline initially, everybody? I know this is boring right now, but I'll get some more good stuff. What is the discipline? Initially, when you're brand new, what is the thing that everybody says, everybody blows into trading because they don't have the discipline to do what? Initially, when you're new. Well, yeah, nobody follows a plan, whether they're new or old, it seems, and that is the key. But initially, it's the discipline to take your stop, right? Isn't that what you hear all the time? I mean, when you become a trader, the first thing you hear is, thou shalt take thy stops, or you will be banished to trader hell. And the truth of it is that, stops are often what hurt people in the end. Don't get me wrong, you need to have the stop in place. But many people actually lose money because of the improper way they use stops. But that's another topic. But when you become more experienced, it's not the discipline to handle the bad trades properly. What does it become after a while? It's the discipline to do what, and this is what takes most people out of the game. Initially, traders have to learn to have the discipline to handle stops, or they go out very quickly. But then down the road, when you learn that, what's the other discipline people have to learn that makes them die 1,000 paper cuts? What is it? The discipline to do what? Well, the discipline to handle the trade properly when it goes in your favor, right? When the trade goes against you, you learn, okay, bam, I took a hit for that. But then when it goes in your favor, how disappointing is it when you don't make a lot of money on a good trade? Isn't that true, everyone? Isn't that true? When it doesn't go in your favor. So I'm going to move on from here, but if you want more, there's 2 articles that go into more detail about this whole definition of trading thing, and maybe it's boring to you, but they're not actually on the site, so here's the links to them. They actually come out in a letter I put out, but there's a couple links to them. You can access those if you want to read more. So I'm going to move on from there, but if we're going to talk about technical trading, I think my concept or definition is something you should know. What is technical? Basically, is everything statistical about whatever you are trading. It's the history of price first and foremost. And it's funny, if you talk to somebody who, boo-hoos technical analysis, it's ironic because what they will say is, well, you are trying to use the past to predict the future. And they say it as if there's something wrong with that. It's kind of like in politics today, right? People just say stuff and they make fun of it, and sometimes what they're saying actually makes a lot of sense. But what is so silly about using the past to predict the future? It works for everything else in the world, and it is what we do to some extent. And it is true. A trend is one of the most powerful things you have in your favor. There's 2 and only 2 times where you have the odds in your favor. One of them is when you're following a trend. What is your answer? 1,000 paper cuts is when you are constantly taking small profits, Joe. You're not losing big chunks of money, so you hang with it. But over time, you're not making money, and you just keep breaking even, right, or losing commissions or whatever it is, and then eventually you bow your way out. So it's dying 1,000 paper cuts. So it also includes any statistical information about price. Now, you don't make trades based on statistics because they don't often line up. Remember, a statistic is something averages out to be 10. It could be because one time it was 1 and one time it was 100. So you can't always use statistics. But when they line up with other things, they can be very interesting. Technical charts, a track record of what has happened in the past. Now, as I proceed through this talk and the second half of my talk, I'm going to boo-hoo a lot of other things. I'm going to boo-hoo fundamentals and news and economic data and a whole lot of stuff because I simply know. One other background thing on me is that I have simply been what I call in the trenches for 19 years. There are probably few people in the world, and I'm not joking, that have looked at more charts than I do. I'm looking at charts, and I've been doing it for as long as I can remember, and I study them, and I look at them, and I don't just look at them like I'm watching a TV screen. I look at, study, follow up, and get to understand everything about them. And if what I say later offends you about fundamentals or about news or about the economy, keep in mind, it's not that I or any good technical person thinks that all that other stuff is necessarily wrong. It's just that I think it is all built into price, and it's built in such a unique and over foreshadowing way that there's no way to discern it to make any useful information out of it. In other words, the chart is what's going on. It doesn't matter what people say, it doesn't matter what people predict, it doesn't matter what anything. What matters is when people put their money on the line, the chart is the only thing on Wall Street that doesn't tell a lie. The other thing, Joe, is shock value. The 2 times you have an advantage, an edge, is when you're following trends and when you're playing shock value, sudden changes that tell you, based on a chart, that there are people that will have to make changes in their position. They have no choice. I'll show you an example of one in just a minute. All right, moving on. Many of you probably know this. I don't want to really go into this too much, but just as a statistic, most bullish, most bearish 6 months of the year, just to give you an example for people who think this doesn't really matter. If you would have gone back, this isn't the stock almanac, but if you would have gone back about 43 years and you took $10,000 and invested it in the market, and you kept the money in there only between November and April, your $10,000 would have been about $500,000. If you would have invested that money only between May and October, your $10,000 would be $9,000. You would have lost $1,000. And there's some other, these statistics here are a little bit different, incorporating other things, but that's the basics of it. So it's amazing the most bullish versus the most bearish 6 months of the year. Absolutely incredible. Now, does that mean every year you pull all your money out of the market in May? Not necessarily. But guess what? We are in the beginning of April. And if we continue to run up the next 3 weeks, you better believe the sell in May and go away thing, even though it's a very small thing, is going to be in play this year. Technical trading allows precise objective entries and exits. It removes as much as possible one of the biggest enemies of the trader, which is subjectivity. When anyone comes to the market as a brand new participant, they come in 100% subjective. Correct, everybody? There's a lot of you out there besides Joe, right? I love when there's an audience and participation. You guys all out there? Yeah, when you guys come in, you're 100% subjective, right? You know, boy, that stock can't go lower, it can't go higher, that has to stop here, it has to do this, and oh, that news wasn't that good, it's got to come in, all that 100% subjective. And our goal in becoming good at the market is to become as objective as possible, as objective as possible. Is it possible to become 100% objective, everybody? Very important point. Is it possible in trading, in dealing with the market, is it possible to be 100% objective? Anyone else? It's correct. It's not possible. There is some art in trading. Our goal has to get things to be as objective as possible so that we can quantify what we do, so we can evaluate it, so we can test it, so we can see our performance, so we can change things, so that we have a structure working. But at some point, there's some subjectivity involved. There has to be. Because you know what? There is no computerized trading system for the market. There is none. Period. I don't know if there ever will be. But by definition, actually, there can't be. Because it's like me inviting you all over to my house for a poker game and saying, well, I have this great new game, you're going to love it because we all walk away winners. It can't be. The market is a zero-sum game, you know, not counting commissions and whatever, but the raw market is a zero-sum game. So if the market stays put for one day, if I win, Joe has to lose. If Joe wins, I have to lose. So there is no way that everybody can win all the time. So it'll never exist. What percent technical am I? I already told you, I'm 110%. There is no discussion about it to me. Next title, can you trade in a vacuum? You may not understand what this question means. It means oftentimes technical analysis sometimes. I'm a real critic of the way a lot of technical analysis is taught. It's what I've loved doing my own company because I do teach seminars for those who want to attend them. They're very different than what you've heard. Even the basic stuff is very different because a lot of people just simply teach it wrong. And one of the things that's always taught is about you learn these patterns and it's as if you're in a vacuum, meaning can you trade a pattern? If I show you a chart of XYZ, whatever it is, and you say, boy, it's the best setup in the world, can you trade in a vacuum? Well, the answer is yes, you can in theory. Meaning, can you ignore everything else in the world? Can you ignore the market? Can you ignore relative strength or weakness? Can you ignore all this other stuff? And you can when you find these perfect patterns. But the problem is that perfect patterns are very rare to find. And the whole concept of what is perfect is very subjective anyhow, right? Why in theory? Perfect is subjective. Great traders may disagree on a pattern. It's very possible that two great traders, one could say, that stock gapped up, I'm going to play it long until it stops going up. And the other person's going to say, well, I don't know if it's going to go up, but if it goes up enough, I'll start shorting it. There is no perfect concept that everyone necessarily agrees on. There are a million different ways to make money in the market. All of them are good. What you have to do is to capture your little niche and get good at it and perfect it. The truth is that most of trading is about trying to deal with the fact that things are never perfect. Listen to that line a minute. I think it's one of the most important lines you're going to ever hear. Everybody focuses on finding perfection, and you know what? You never find it, right? You never really find it. And even if you do, we could disagree. I could have somebody show me a perfect pattern, and I'd laugh at it. I could show my perfect pattern, they'd laugh at me. Trading is not, the goal is to find perfection. I'll give you that. But listen to this again. What makes you successful in trading is dealing with the fact that you never have perfect patterns. And no matter what your standards are. See, I argue with people sometimes that say, well, you just have to have these real strict standards. Okay, I don't care how strict you are. There's always a borderline case. Isn't that true? Isn't that true? There's always a borderline case. I don't care where you move the needle. From 90% to 95 to 97 to 98, it doesn't matter where you move the needle, there's always a borderline case. And it's how you deal with that borderline case that really matters. Having the techniques and the extra tools in your belt to be able to handle those situations properly when you need to. That's what a lot of technical analysis is about to me. Not just learning that, well, this is the absolute only spot you can buy this, and this is the absolute only spot you can stop it out, and this is the absolute only spot that you can take a target at. That's what you're taught, right, everyone, when you're newer to technical analysis, and that is what has everybody losing all the time. The most professional people in the market, even though they're not traders, are the specialists and market makers. Keep in mind, they are not traders. As a matter of fact, they're bad at trading. I've trained 2 market makers. They're bad at trading. But what they do is the most professional way to make money, which is they are not buying a number, selling a number. They're constantly buying areas and selling areas. And they can do that because they have infinite money, no commissions, so that they can use that system. You and I can't do that. But doing the opposite of that is what has a lot of people losing money. To say this is the precisely where you get in, where you get out, and where you have a target. Sure, those numbers are there theoretically, but it's how you handle those numbers is a big part of what I teach in terms of managing entries, exits, and stops. To me, it's by far and away the most important thing you'll ever learn about actually making money once you get beyond understanding the basics of a chart. What's a perfect pattern? You want to see some charts? Here's a chart. I happen to have what I call a perfect pattern show up 2 days ago. I like to use only things from the last couple days, but in preparing for this, I couldn't use today really. I did throw one chart in here from today because it showed a perfect example of something. But this is from Tuesday. This is from the 8th. Yeah, it was Monday. This was a gap. Now, some of what I do is gaps, not all I do. About a fourth of my trades involve stocks that gap in the morning because they present a unique opportunity. This is SYMC. This is what I call a perfect pattern. When this stock was gapping to here, I assume you can see my little arrow here. Can you see my arrow here where I'm pointing? I'm not sure. I can't see the camera view of what you got. Okay. When this stock was gapping to here before the market opened, to me that was clear the desk, move the coffee, get out of the way. This is the play. And what you have to be good enough at is to know not just when to not take something, but when you have to take it. There was no second chance to get this. I got in the beginning of the second minute of the trading day. Now, I don't always, again, I'm not hyper in terms of a scalper, but sometimes when you have to get in, you have to get in. There was no second chance. This thing just flew. So I got in early, right down here, target 1, target 2, and really did a good job taking targets. I had the patience to wait for the appropriate targets because I knew this would put in one of the biggest green bars on the daily chart, which it did. So to me, there's an example of a perfect pattern. And when this pattern came up, I didn't care at all about the market, what the market was doing, the market bias, time of day it was, what reports are coming out, nothing. This is an absolute, positively, to me, a perfect play. Luckily, it happened a couple days ago because on a typical week, maybe there's maybe 1 or 2 things I would have maybe called a perfect play. The rest is trying to make do with the less than perfect stuff I have to deal with every day. So that's a perfect pattern according to me. I had one last week I sent out to HLT. I send out to members at DTS, free members. Every once in a while I'll send an educational lesson. And I set one about HLT, which was last week, but I didn't capture that chart for you here. Another great technical concept, and again, this part of the talk is about my first half today, up till about 2:15 or so. I guess it doesn't really matter, does it, if I run over 2:15 or not. But my first half is about great technical concepts, things that you need to really understand about technical analysis. I hope you understand this is not going to get into specific strategies. It takes a long time to teach those, and that's part of what I do for people who want to learn them. But these are just big, broad concepts that are tremendously important that most people never get. And here's the other one, the balancing act. This is always an issue. Every trade, every decision is the balance between reliability and profitability. Reliability, the likelihood of not stopping out. Profitability, how much to make on that particular trade. This is a balancing act you do every second of every day if you're a day trader, every minute of every week if you're a long-term trader. It's a balance you always do. Should I get in now? It's really aggressive. If I get in now, I'm not sure it's moving in the right direction. But every minute you wait, every day that you wait, it's going toward your target. And remember, there's like a 2-for-1 effect. Every time it goes toward your target, one dime, let's say, that's another dime that you're taking off of your target if you wait, and another dime you're adding onto your stop, right? Your stop and your targets are on the chart. You can't change those. You just can't simply say, oh, I want a $3 move, period. Well, you can want whatever you want, but the chart is going to give you whatever it gives you. There's going to be so much move, and that's it. So you're locked in. That is the floor. There's the ceiling, and the more you wait, the more you're giving up. So there's a balancing act where you have to say at one point in time, I want the security of knowing I'm right, but if I wait too long, if I'm person 99 out of 100 to buy this stock, guess what? It's not going anywhere. If I'm the last person to get in, it's going to drop after I get in. So we have to find that balancing act. It's not always that simple. Here's a little diagram of what I was saying. Entry 1. I'm not sure I'm right, but if I'm right, I really get a great reward to risk. Entry 2. Maybe I'm got more proof that it's going higher, but now I'm losing part of my target. Entry 3, now my reward to risk is less than 1. And am I really more secure? See, to me, what learning charts is all about. There's so many people that say when you're entering something, you need to wait for really big volume to know the stock's going in the right direction. Is that good advice? Again, I'd be willing to bet that half of what you've been taught or here is just wrong to me, just totally dead wrong. It sounds good. Do you want to wait for big volume? Typically professional volume. Do you want to wait for big volume moving in your direction to make sure you're right? Is that what you want to wait for? Is that good advice? Right, exactly. It's terrible advice. See, we have to be smart enough to know when it's going to move as it's starting to move. Because that volume that comes in needs to take me to my target. If all the big volume comes in, I say, okay, well, now I feel safe to go in. Well, who's going to take me to my target? Now I have to wait for this big pullback and maybe worry about stopping out or never making it there. We have to be smart enough to know with great precision where to get in. I'm going to show you a chart in just a minute, in a couple minutes, from a trade today where the precision makes the whole trade. We have to know that well enough. If you need to have the rest of the world prove to you that you're right about something, well, you shouldn't be trading. You need to be telling the rest of the world when you're right, because you can understand a chart well enough to know, not that you're controlling where the big money comes in, but that you see where it's going to come in. We're going to talk the second half today. We're going to talk about the question, is everything rigged against you? One of my favorite topics. Actually, second half is coming up in 15 minutes. You need to get a watch list of patterns you recognize and love. You need to come to the market prepared, whether you're a long-term trader or a day trader. Matter of fact, I come so prepared as a day trader, I generally don't even scan anymore during the trading day. When the market opens, I have a list of about 15 to 20 stocks that usually is my source of food for the rest of the day. And for the rest of the day for me, I as a day trader, I just like to hit the first hour to 90 minutes for the most part and then manage out the rest of the day. Occasionally, if there's something going on at lunch, I may come back and take a peek. But if you are a day trader and you like day trading, I suggest come take a trial in my room, see if you like what I do the way I am. If you want a hyperactive scalper, you're not going to like me. If you want somebody who sits at the screen for 6.5 hours, you're not going to like me. I hit it hard the first couple hours, and then I'm kind of done. I'm just managing, looking at things, and get off the mic. I think it's the perfect way to trade. Second, you need a plan that includes market time. You need to plan out how exactly you're going to execute these trades. If you don't know exactly where you're supposed to be getting in, you shouldn't be trading. You should be looking at anything. If you're a long-term trader, you should be looking at that daily and weekly chart and saying, here, and point to it. This is where I will get in, period. As a day trader, same thing. When I'm looking at stuff to do the first few minutes of the day, like when I showed you semantic, that gap, I knew exactly where I'd be getting in and how I'd be getting in. It's mapped out in my head. I know exactly, and the stock has to come to me. The stock has to come to me. You don't chase stocks. You don't let stocks drag you around by the nose telling you what to do. Okay? Everybody get that comment? You do not let stocks drag you around, because they will. They will try to. And when I get to the second half, I'm going to show you how stocks drag you around, and the reason it happens, and the reason that people think everything is against them, the reason that people think the market is rigged. It's not rigged, but it is a game with players on the other side. Third, you need an entry concept. I teach entries as a separate strategic concept. If you learned a strategy and the entry is part of that strategy, you're probably really struggling with it, because entries are unique into themselves. Entries are the most critical, most important thing. The entry is everything. The entry serves the important purpose. Of course, it sets your reward to risk, but more importantly, the entry also is what keeps you out of a trade that you don't want to be into, and that's one of the most important things. Staying out of a trade you don't want to be into. If you ever got into a trade and it wasn't looking so good, and you're saying, boy, I still like this trade, but I wish I wasn't in, because if I wasn't in, I'd get in right there, right? That's a little different. And fourth, you need a management plan. Eventually, every trader will succeed or fail based on how well they manage their positions, period. That's all there is to it. As difficult as it is, well, it's not terribly difficult to learn and understand technical analysis. The actual mental ability is no more than what a fifth grader has. A fifth grader has all the mental skill necessary, all the math necessary, all the processing power necessary to be a successful technical trader. It doesn't mean they'd be successful, but that's all that's needed. But taking the time to actually learn, and actually learning the right stuff. I venture to say that, when you just go read the internet, it's all, if you get, Tech Analysis 101 off the internet, it's not that it's wrong per se, but it's so woefully inadequate that you might as well call it wrong. You need to understand concepts better than that. And even when you do understand the concepts, people tend to still struggle because of proper management. I believe in some concepts, real quickly. Finding a moment in time, which also means it's not about being right or wrong, it's about making money. For intraday traders, the 60-minute chart is your mother, your guide. You never trade against a 60-minute chart. I'll show you that in a minute here. And you should quickly ignore 97% of the charts you look at. I am looking for very specific things. And one of the things I learned a long time ago, should I tell you this story? Let me tell you the story. A long time ago, I used to go running in the morning with my neighbor. I've moved since then, but he kind of knew what I did. He didn't really know what I did. He was not involved in the market at all. But he had a retirement plan, and he was loaded up on Allstate stock because that's where he had worked. And he said to me, hey, my whole retirement plan is Allstate stock. Would you look at it for me and tell me, should I be selling some? Should I be buying more? Where's Allstate going? I said, sure. This is my first year in the market, and I was doing well. I was doing relatively well. So I was pretty confident. So I went home and I looked at Allstate that night. I pulled it up on a daily chart, on a monthly chart, on a weekly chart. I went back to the daily chart, the weekly chart, the monthly chart. I turned the charts upside down. I turned my computer upside down. I went upside down, and I was baffled. Why was I baffled? Does anybody know real quick? Why was I baffled? I was totally baffled because I had no clue where Allstate was going. And that bothered me for a long time, for maybe a couple months. And then it began to dawn on me why. And here's another important tidbit, what this one says right here, is that being an expert at technical analysis is not about being able to look at any pattern and make a trade out of it. Now, you could look at any chart and you could say some intelligent comments. You could say, well, here's this and here's that, and if it goes above this, I think it'll do that. But you know what? 97% of the charts you look at, you should never even consider making a trade out of. You should just go next chart, next chart. And this is, as an equities trader, this is one of the big advantages we have. Now, if you're trading the market, if you're trading the S&P futures, the NASDAQ futures, this is something you lose because you don't get to go to another chart. You have to say, well, this is it. Do I like it or not? As an equities trader, I can go through swing trading. I can go through 2,000 stocks. Day trading, I can go through 500, 600, 700 stocks and find the next one, right? Forex, you can go through a half dozen pairs. It's better than nothing, but that's a big advantage of equities, and one that you need to use to your advantage, which is to say, you have a chart you don't know what to do with, go to the next chart. One of the biggest things I can get across to you. Do you think it's possible to look at a chart and find a trend? I do teach this concept of a price cycle, and there is a price cycle, and every single chart you ever look at does fall into the price cycle. And here are words, when I teach this first class, here are words right out of the class, Joe. Every single price pattern you've ever looked at falls perfectly into the price cycle. And in hindsight, you can always go back and draw the price cycle over it and say, yep, there it is. 100% of the time guaranteed. The problem is, Joe, is that in real time when you're sitting there, 97% of the patterns are so sloppy, you don't necessarily know where you are until after the fact. We need those patterns that are clean and precise enough that I can say, you know what, here's where I am. Here's where I'm going next. Here's how I'm going to get there. Make sense? So sure, I can make all kinds of comments about the chart, but it's unlikely I'd be able to say, should I buy this today or not? That would be very unlikely. To show me a random chart and say long or short. That'd be very unlikely to be able to do that. Today, the balancing act, precision. This is a chart from today. I just trailed out of the back half of this just before I came on the mic. This is PBCT. So let's go through the process real quick. This is great technical concepts. What did I do? Everything I told you about. And this is right off the screen today. I came to the market with a watch list of items. One of those things was PBCT. It was on my list because of this daily chart. Again, I don't want to get all bogged down in some of the technical reasons, but this daily chart will get selling in this area. Will it completely roll over and go to a new low? Probably not. But will it get significant selling? It will. So as a long-term trade, not real clear what this is going to do, but as a day trade, I know this is going to get selling every time it pops up here. I know that from the daily chart, and also there's from the hourly chart in here. So I put this on my list because I saw this retracement rally coming back up. Now this, again, this is today. This is literally off the screen before I came on today. So this is today, and I don't know whatever time it is, around noon or something. So what I wanted to see this do was, again, I wanted to see this run up to challenge this prior high. Now, what are the odds that's going to happen? Well, not that good. That's why I have several charts on my screen. See, I have like 15 of these on my screen. And I'm waiting to see the one that does what I want it to do. Does that sound familiar? I said that like 5 minutes ago. You wait for the stock to do what you want it to do. So daily chart gets me interested, goes on a watch list. All of a sudden today the watch list becomes active because I am in a situation where if it runs up, now if it didn't run up, what would I be doing today? If this thing just opened flat and sat there, what would I do? Nothing. Because I don't necessarily have a concept for that. On another chart, maybe I could have had a concept, but this one I don't. So this is the daily chart, this is the hourly chart. I'm going to take you down now. I'm going to flip the hourly chart to the left and go to the 2-minute chart. Guess what happens? Boom, boom, boom. We run up right into that area on a big wide bar, and we get right to that prior area. Okay? Now again, here's where, I think a lot of people fail. Where do you get in this? You know where I got in this? Under 16.99. The high was 17.00. Now I'm not telling you that was my stop. That would be silly because I couldn't share size it to a 2-cent stop. But when you have the ability to take out, now again, this to me was perfect. That doesn't happen every day, right? Some days you have to deal with less than perfect. But when you have perfect, think of all the different choices you have, what you can do with that entry. I'm literally in 2 cents under what turned out to be the high of the day. I could have an extremely safe trade that would never stop out. I could really size it up and go for the home run. I could get in normal sizing and then bring the stop down quickly, which is what I did. So that this trade, just minutes into the trade, only had about a 1/5 risk amount from what I was willing to risk. I can go on to another trade. Turns out it fell. I took a target down here at 0.86 or something like that, and then I set a trail stop and I got out of the rest a little bit down here. So it's a decent trade, but this trade alone makes my whole daily goal. And what does it come about? It comes about from nothing but just some common sense, a little work, and a little understanding of exactly how to do this. I don't know of many other traders that would do this like this. To me, it's the only way to trade. So there's a balancing act. What choices do you have when you're accurate enough to short a couple cents off the high? Well, I just discussed those. That's really that slide right there. All right. Well, look at that. Well, I just totally took a guess on the time here. It's 2:13. You guys have any questions about this presentation? This is the first half of what I'm doing. I have a second set of slides for actually a slightly different topic. Any questions? Anybody? Again, I have nothing to offer you. I don't ever discount or have sales. And actually, what I encourage you to do, I don't want you to, I don't want you to buy anything. I want you to you shouldn't buy anything from anybody that you don't know. You should get to know them a little bit. I encourage you to go to the free stuff page and to see the information there. And I also really highly encourage you to become a DTS member. Let me give you the link to that, because that's all I want you to do here today. Because I don't know if that link can get passed on to you, but if you go to the home page, there's a little thing off to the right that says be a DTS member. There's no expense, there's no credit card, you don't even need a name. You can just go make up a Google address if you want to, and you will get a lot of good free information, invites to activities, all kinds of good stuff. So check it out. I'll also get an email about the stuff you can do for free and trials you can take, whatever else you'd want to do.